Good afternoon. This is Michael Bernstein, working out accountant, ready to give you the tax and financial tip for today. Today it's a little jog through Seaport Village, saying hi to the people I know. In any case, the new topic for today is rental property. It's going to be a multi-video tax tip because there's several parts to this that I want to talk about. The first one will just be talking about the main issues related to rental property. Is it a good investment? Well, that might be a question for the financial advisor, but I'll give my opinion. And yes, depending on your asset allocation of all your assets, property should definitely be part of it. In addition to the home residence, your rental property. Rental property can be a single family residence, it can be a duplex, it can be a fourplex, or even more units than that. Let's talk about how you report a rental property. Oftentimes I get the question, so if I have a loss, can I deduct it? And I say, that's a bad attitude. I thought you want to profit. We always want to profit in business. But they are right about one thing. Normally, unless you pay cash for the property, usually does run at a loss first couple of years at least, so you can raise the rents. All right, so how do we report a rental? Report the rental income. We're meant to report all the rental expenses. Could be HOA fees, license fees, property tax, mortgage interest, repairs, insurance, advertising. Get the idea? Everything. Could be management expenses, managing the property. So it's all the expenses. In addition to that, we deduct depreciation. Because I didn't say principal on the mortgage, I said the mortgage interest. So if you take the cost of the home, let's say it's $400,000. Let's say it's divided, land is 200, building is 200. You take the building of 200, divide by 27.5 years if it's a residential rental, and so we get a deduction for that each year. And that's a little bit like writing off the principal. But remember, you have to recapture that later on, especially the house goes up in value. Okay, so let's say that does result in a loss. We're going to address that in the next video. Let's say it creates a profit. Profit is added to your other income, and you pay tax in your normal tax rate on it. If it's a loss, it falls in the category of passive losses, and that will be our next video. Okay, see you next time. Get out there and jog. Bye.